Shares of Badger Infrastructure have rallied today. The stock has hit its highest share price since June of last year. For more, we're joined by Bloomberg's Stephanie Hughes. Stephanie, great to see you as always. Tell us more about Badger.
Absolutely, Paul. So those shares rose by nearly 10% today, and it hasn't been since November 2023 since we've seen this stock get a boost of that magnitude. Like you mentioned, it brought the share price to its highest levels since June. So it's been clawing back some of the gains it enjoyed last year. And this came after commentary from Stifel that raised the price target by $2 to $53. But more importantly, the analysts encouraged investors to revisit the company. And it seems like they're doing just that with today's gains here. So the company, for viewers who don't know, it specializes in non-destructive excavating services like laser profiling, concrete removal, and other services kind of like that. So the Stifel analysts pointed to a few macro data points like an improving 2025 outlook and the company's compelling financial metrics, in their words. So the team also estimated that the company could generate about 92% of its EBITDA in the U.S., and it positions to benefit from what's expected to be a more active industrial economy in the Trump administration. So a few things going for it today, Paul.
I know you're also watching Birchcliff Energy. If I understand correctly, at least 3 analysts have raised their ratings on Birchcliff Energy after the company cut its dividend, correct?
Yes, that's right. So shares really did get a lift off today, and that was because of the dividend cut. But let me just really put a size and scope of this gain here. So the stock gained by over 9%. That was its biggest jump in nearly a year, and it brought the stock price to its highest level since August. Like you mentioned, the Albertan oil and gas companies gaining strength because 3 different analyst teams upgraded the stock. So that was TD Cowen, National Bank, and Peters and Company. So the 2 Canadian banks raised that recommendation to a buy and outperform rating, whereas Peters raised to a sector perform from a previous underperform rating. The reason was because the dividend cut, which now stands at a quarterly dividend of about 3 cents per share. That was called a right-sized move, and they really characterized it as the firm taking the proper pivot, saying that it would lead to more spending and perhaps more free cash flow. So they said the move marks a strategic pivot. So Birchcliff stock, just to bring it back to perspective here, has been gaining since its slump in the middle of December.
Stephanie, we will leave it there. Thanks to Stephanie Hughes for keeping us up to date.